Hello, everyone. Welcome to the special weekend edition of Markets Around the World. I'm K2, and we have some exciting news and data to discuss today. We'll dive into the latest updates, analyze key macroeconomic trends, and highlight the critical levels you need to watch. We'll cover CPI, PPI, and job data, and developments in the bond market and macroeconomic landscape. If you're as passionate about the markets as we are, be sure to subscribe and deepen your understanding of how global markets interconnect. In this episode, we'll explore a wide range of data, news, and macroeconomic trends. We'll break down what's been driving the markets, review recent events, and discuss the outlook moving forward. Let's start with the top headlines making waves. Historically, years ending in 5 tend to be strong, with only 2015 finishing lower, and that was by less than 1%. Some of those years were particularly strong, including 1955, 1975, 1985, and 1995. Concerns about the health of the U.S. economy have investors on edge over the possibility of an approaching recession, and the upcoming jobs report may not provide lasting reassurance. Investors and traders will closely analyze Friday's non-farm payroll report for February, especially in light of recent developments that have raised fears about weakening consumer demand and a potential economic downturn. These concerns have already led to notable declines in stocks and Treasury yields. Cryptocurrency prices surged Sunday after President Donald Trump announced plans for a U.S. strategic crypto reserve. Bitcoin jumped 10% to a peak of $94,821, while Ethereum gained 12%. Ripple soared 30%, Solana rose 20%, and Cardano skyrocketed over 50% after Trump specifically mentioned them. Prices later pulled back, with Bitcoin dipping below $93,000. On Truth Social, Trump said his executive order would establish a crypto strategic reserve, including XRP, SOL, and ADA, vowing to make the U.S. the crypto capital of the world. In a follow-up post, he added Bitcoin and Ethereum, stating, "I also love Bitcoin and Ethereum." President Donald Trump's proposed Gold Card program, aimed at attracting wealthy immigrants, could drive up home prices and worsen the U.S. housing affordability crisis, according to real estate experts. The plan would offer a path to citizenship for immigrants who invest at least $5 million in the U.S., a higher threshold than existing programs. Trump suggested it could attract 10 million highly productive people and generate enough revenue to help pay down the national debt. While details remain unclear, experts warn that if real estate investments qualify for the program, it could further inflate home prices. The White House has not commented on its potential impact on housing. As traders await President Donald Trump's decision on new tariffs for Canada and Mexico, the U.S. Treasury Secretary has pointed to a potential alternative for America's neighbors. One very interesting proposal from Mexico is matching U.S. tariffs on China. Treasury Secretary Scott Bessent said in a Bloomberg TV interview Friday, when asked if neighboring countries could avoid American tariffs. Now let's review some data I want to show you guys. We begin with 3 reasons a choppy start to 2025 is completely normal. 1. After a 20% gain, early year weakness is typical. 2. Over the past 20 years, market bottoms in March have been common. 3. The first quarter of a post-election year often sees volatility. Don't panic. How bad is the U.S. debt crisis? U.S. net interest payments hit 18.7% of federal revenue in January, the highest since the 1990s. Just 20 basis points below the all-time high of 18.9% in 1992. This share has doubled in 18 months as interest costs skyrocket. Interest expense hit a record $1.2 trillion over the past year, now the second largest government outlay after Social Security. The worst part? Net interest costs could reach 34% of federal revenue by 2054, assuming no recession. This is a crisis. U.S. housing market. Worsens new home prices surged by $31,000 in January to $446,300, the second highest on record, just below the $460,300 peak from October 2022. As a result, new home sales dropped 10.5% month-over-month, the second largest decline since September 2022. Since August 2020, new home sales have fallen by 374,000 to 657,000. Housing is still getting worse. Final S&P 500 February. Heat map. Tesla, negative 24.7%. Advanced Micro Devices, AMD, negative 14.9%. Alphabet, Google, negative 12.6%. Microsoft, negative 10.2%. Amazon, 10.1%. Meta, 1.2%. Nvidia, plus 1%. Apple, plus 1%. Big week of retailer earnings. On Tuesday, Target, Best Buy, Nordstrom, Ross Stores, AutoZone, on holding on. Wednesday, Abercrombie & Fitch, Foot Locker, Victoria's Secret on Thursday, Costco, Kroger, BJ's Wholesale, Macy's, Gap, Burlington Stores. Key events for this week. Monday, ISM Manufacturing PMI. Tuesday, Target earnings, Trump tariffs on Canada, Mexico, and China. Wednesday, ADP payrolls, ISM services PMI, Fed beige book. Thursday, initial jobless claims, Broadcom earnings, Costco earnings. Friday, U.S. jobs report, Fed Chair Powell speech. All right, ladies and gentlemen, that's all for this week's video. Hopefully you enjoyed it. If you found value in this video, please like and subscribe. If you have any questions, feel free to ask. Thank you for watching, and I'll see you all later.